Welcome back and hope you're having a good morning. Well, Granules India, that's the first management on the show. The company actually reported a good set of numbers. The growth mainly was due to the formulations in North America as well as in Europe. We're now joined by Mr. Krishna Prasad, Chigurupati, the chairman and managing director. Hi, sir. Good morning. Always good to see you in, sir. A couple of quick questions first. In the first quarter, I recall when we had a chat with the management, you all had indicated there were some constraints, capacity constraints. Has all of that been ironed out in quarter two? And from here on, things have returned back to normalcy? And also on margins. Are margins on an improvement trajectory? If you could give us a margin band. Please go ahead.
Good morning.
Morning.
Since we last spoke, Q2, the growth was driven mostly by the manufacturing in our US facility. The constraints in manufacturing in India still continue at our Gagillapur formulation facility. However, we had approval, the US FDA has approved our new facility at Genome Valley, the GLS facility, and that would take away most of the constraints in manufacturing. And I see Q3, at least the rest of Q3 and Q4, that the constraints in manufacturing will be over, and we should continue the growth trajectory.
Okay. All right. So for the first half of the year, you've done close to around 16-17% of revenue growth with margins at around 21% odd. Could you give us numbers? I think you were guiding for mid-teens earlier in terms of growth. So do you stick by that and margin band?
Yeah, I always stick to that. I think definitely we will have some growth, and definitely with the new capacity coming in at GLS, we are quite confident that we'll have a much better quarters going on.
Mid-teens growth, right? Revenue growth?
Yeah, I don't think I should exactly be guiding you, but yeah, I'm very confident and optimistic.
I think the street is working with 13 to 15%, so that's good, right?
That's okay. Let's look at that.
All right. You briefly mentioned the Gagillapur facility. Could you give us what is the status update on that front? Earlier, I think we were talking about things gradually start clearing out from December onwards. Where is it at, and how do you expect things to progress?
We did comply with all the requirements of what the FDA has asked us, and we have reported back to the FDA saying that we are ready. We asked for a meeting or a re-inspection, and they have given us a meeting in January of 26. A little disappointing, it's stretched, but there's nothing else we can do. We look forward to having that meeting, and then we have to see when they're going to, what their next steps will be. But however, we are not constrained by great manufacturing today because of the new facility. But once we get the warning letter lifted, we have some new approvals that are pending. And those approvals should again drive up the growth of the whole company.
So if this meeting is in January, sir, good morning. What is the, what do you do from that facility? And it's not holding you back, but once, say, for example, remediation happens there, what will it allow you to do?
Look, production is continuing today. We don't have any constraints on regular production, except for some of the things that the FDA wanted us to do, like cleaning. There was a constraint in capacity. So that would be gone, number one. And other thing is the new approvals, products that are pending, will drive a good amount of growth.
A lot of filings from that facility, sir?
Sorry?
There are lots of filings from that facility, which
there
perhaps...
are about 3 to 4 pending already, which have been filed, and everything is cleared. We're waiting for the lifting of the warning letter.
Okay. Could you give us a margin profile as well for the year ahead? If 27 is going to be a growth year, what will margins look like?
Margins will definitely be at the same level, if not improve. We are positive on margins, and with extra capacity and taking care of overheads, the margin should definitely improve.
Okay. All right. What about the debt number, sir? I think it's more or less constant, gone up a little bit.
It has gone up a little bit because of the Sun Chemicals acquisition. But as we go by, that should be slowly coming down.
All right. So by the end of this year, what should the debt look like? Or let's talk about FY27. If it has to come down, what level does it come down to?
Maybe it should be coming down by at least 10 to 15%.
And currently it's around 1,050 crores.
That's right.
So it comes down to ballpark close to around 900 to 950 crores by FY27 end, right? Not 26.
That's right. That's right. Because we also have a lot of capex going on. Otherwise, it would have been a much better number.
Got it. All right. And I've just looking at your numbers. I think your gross margin as well has expanded quite well. Operational efficiency and better product mix have worked in your favor. Well, appreciate you joining in, sir. Wishing you all the best for the Q3. And hopefully, I think in Q4, you'll see that Gagallapur unit that sees an all clear. Thanks a lot for joining in. Wishing you a good day ahead.